President Donald Trump has announced a 200% tariff on imported European wine and champagne, marking a dramatic escalation in ongoing trade disputes. This decision came in direct response to the European Union's implementation of a 50% tariff on American whiskey. The impact on consumers is expected to be substantial, with a typical $15 bottle of French wine potentially retailing for approximately $45 after the tariff. This price increase affects not only luxury wines but also moderately priced options popular among middle-class consumers. Despite economic concerns, Trump remains steadfast in his position, stating, "We don't need their wine, they need us." However, analysts note that the United States does not currently produce enough wine to replace European imports, suggesting that even domestic wine prices will likely increase as demand shifts to American producers. This tariff is particularly significant as it directly impacts suburban middle-class women, a demographic crucial in recent elections. Market reaction and economic consequences. The U.S. financial markets responded negatively to the escalation of trade tensions, with the Dow Jones Industrial Average declining 850 points, Nasdaq falling 3.1%, and the S&P 500 dropping 2.3%. The 10-year Treasury yield rose to 4.9%, indicating increased recession concerns among investors. The technology sector was hit particularly hard, with Apple's stock declining 5.6%, Tesla falling 4.8%, and Nvidia experiencing a 7.8% decline, equating to approximately $180 billion in market capitalization losses. Transportation companies also suffered, with Delta Airlines announcing a 50% reduction in profit forecasts due to rising fuel costs, causing its stock to plummet 14%. American Airlines and United Airlines experienced declines of 11.2% and 9.8% respectively. Major investment firms including BlackRock, Vanguard, and Citadel engaged in significant equity liquidation, with approximately $240 billion withdrawn from the market in a single trading day. In retail, Walmart lost 12% in value while Amazon declined 9% amid consumer spending concerns. In total, an estimated $4 trillion in market value disappeared in just 24 hours. International responses. International reactions to Trump's tariff policies have varied in approach but uniformly express concern. The European Union has implemented counterbalancing measures designed to offset the value affected by U.S. tariffs while minimizing impacts on European businesses and consumers. Under Prime Minister Mark Carney's leadership, Canada has adopted a multi-pronged approach including implementation of countermeasures on key American industries, expansion of trade relationships with the EU and BRICS nations, investment in domestic production, development of renewable energy capacity, and advocacy for reduced reliance on the U.S. dollar in international trade. Mexico, under President Andrés Manuel López Obrador, is pursuing negotiation while preserving the option for retaliatory measures. Similarly, Brazil's finance minister Fernando Haddad has criticized the tariffs as unreasonable and wrong while pursuing legal remedies through the World Trade Organization. Political and media reaction. The tariff policy has generated significant political controversy domestically. Fox News, traditionally supportive of the Trump administration, has demonstrated increasing skepticism, with senior correspondent Peter Doocy noting that even Trump's closest allies disagree with his tariff strategy. Direct challenges to administration claims about tariff impacts have emerged, including pointed questioning of White House spokesperson Carolyn Leavitt when she claimed tariffs were not tax increases. According to the American Enterprise Institute, 98% of U.S. tariffs on China are actually paid by American businesses and consumers. Contradicting administration assertions, Federal Reserve data indicates a 65% probability of recession in 2025, exacerbated by trade policy uncertainty. Economic indicators. The economic fallout continues to intensify as key indicators reflect growing market concerns. The unemployment rate has increased to 4.6%, marking a troubling trend after several years of stability. Consumer confidence has reached an 18-month low, with surveys indicating widespread anxiety about future price increases across multiple sectors. Core inflation has risen to 5.2% year-over-year, partly due to tariff-related costs being passed on to consumers. Small businesses report particular vulnerability, with 62% indicating they've been forced to raise prices directly due to increased import costs. According to the Small Business Administration's quarterly survey, sector-specific impacts. Beyond the wine industry, multiple economic sectors face substantial disruption. Agricultural exports have declined 18% year over year as retaliatory tariffs limit access to foreign markets. Manufacturing costs have increased approximately 9% across the board, with industries reliant on European components reporting the highest impact. Retail associations project holiday spending will decrease 7% compared to previous years as consumers adjust to higher prices. The automotive industry faces compound challenges with both steel tariffs, increasing production costs, and reduced consumer purchasing power limiting sales, resulting in a projected 120,000 job losses across the supply chain. Expert analysis. Economic experts from across the political spectrum have expressed concern about the long-term implications. Former Treasury Secretary Janet Yellen warned that trade wars historically create far more economic casualties than victors, while conservative economist Milton Reynolds noted that even when tariffs achieve their intended foreign policy goals, they typically do so at substantial domestic economic cost. The Congressional Budget Office estimates that if current trade tensions continue for another 6 months, GDP growth could be reduced by 0.8 percentage points in the coming year. This translates to approximately $190 billion in lost economic activity and potentially 750,000 fewer jobs created. Consumer impact. For the average American household, the effects are increasingly tangible. Economic models suggest the typical family of 4 will face approximately $2,800 in additional annual expenses due to tariff-related price increases across various consumer goods. This burden falls disproportionately on lower and middle-income households, where necessities consume a larger percentage of disposable income. The housing market has shown signs of cooling as mortgage rates climb in response to broader economic uncertainty. New home starts declined 7.2% in the previous quarter, while existing home sales fell 9.4% year over year. As global trade tensions show no signs of abating, economists are closely monitoring several key indicators that will determine the severity and duration of economic impacts. Business investment intentions have declined for 3 consecutive quarters, suggesting pessimism about future growth prospects. Supply chain reconfigurations are accelerating as companies seek alternatives to tariff-affected goods, though such transitions typically require significant time and capital investment. The Federal Reserve faces increasingly difficult monetary policy decisions, balancing inflation concerns against growing recession risks. Market analysts now place a 65% probability on at least 2 interest rate cuts in the coming year as the central bank attempts to cushion economic impacts. These economic indicators have raised significant concerns among voters about the long-term impacts of the administration's trade policies, particularly as the effects become increasingly visible in everyday consumer experiences. Whether this economic strategy will achieve its intended outcomes remains the subject of intense debate among policymakers, businesses, and consumers alike.